Hello, everybody. Kirk Spano and Scott Shooter Henderson.
It's me.
Yeah, that's him. All right. Major markets weekend update. Let's start, Shooter, with the dollar. Do you want the monthly dollar? Because I got the monthly dollar.
Monthly's fine.
Tell me a story.
We're batting our head against resistance here. The challenging part is, there's a little noise, or I should say there's some cracks that we see, or I'm seeing in the markets at this point. If the dollar continues higher from here and we break above that 104.88, we could really turn into a slight bear market for a little while, because then that means we're going to have an uptrend in the dollar, and that is going to be a significant headwind for U.S. indices. So that's my thought on the dollar.
Yeah, and I've been thinking that for a little while, that we'd get an uptick in a dollar up to here to about 110 is what I was thinking. You have 106.
Yeah.
So
on the other side of the coin, though, if we continue this leg lower, that's going to be a significant tailwind. So we could go right into a new rally. I mean, we really are at a crossroads where we are now. And the ironic thing is that, our retraces, outside of specific names that have, basically done round trips, our retraces are shallow in a majority of our leaders. When they take the lead, they hold it for weeks, instead of days. So, we have a different demeanor in the markets here. Clearly, we have, capital coming in off the sidelines. We continually see that in the dollar closes as far as revenue. Like, for example, we didn't even have a sell-off in Optex this last week. And typically you always get that, either 2 hours before the close or right into the close. You have everyone who hasn't cleared their positions, all the funds that were selling or rebalancing, it occurs during Optex. And we got barely nothing as far as a drawdown this way.
So this is what it looks like on the weekly. You can see that it's really channeling.
Tightening up. Notice how tight it's getting. It should continue to tighten up until it decides to break whichever direction. Now, technically, the most likely outcome is to the upside. 70% of the chance on any type of a wedge like that typically breaks to the upside.
And it has been advancing upward since 2012. So this is not a short-term thing. This is a 12-year bull market in the dollar. I do think that we are close to a cyclical dollar decline, and it has to do with our debt situation, which, by the way, I was watching Wall Street Week on Bloomberg this morning, having my first cup of coffee. I'm now on coffee number 2. And one of the guests, I can't remember which guy it was. I think it was Larry Fink. They had like a great program today, but Larry Fink was on there. I'm pretty sure he's the one that said, look, if we can grow GDP at 3% for a decade, that's not a problem. So what can make the U.S. economy grow at 3%? And that would be
improvements.
Yeah, it'd be rebuilding a lot of stuff, right? Moving, onshoring some stuff, but really changing the energy equation. There's a lot of things that we can grow to get 3% instead of 1.5%.
Well, what's the catalyst?
I think clean energy. I think fourth industrial revolution. I think immigration. I think all the things are lined up. It's just we have to not break it.
I think artificial intelligence is a driving factor in all of those you mentioned.
Yeah, well, that's the fourth industrial revolution, right? I mean, it's one of the linchpins. Back in CES 2020, the CEO of Samsung said 5G, artificial intelligence. 5G, artificial intelligence. What the heck was the third thing? Anyway, and the cloud. They said it's the perfect combination. It's the perfect marriage to drive the efficiency and productivity in the economy. I mean, I really do think that as population growth flattens out in the next 20, 30 years, even more, I do think that we are, and I don't know if it helps you and me, Shooter, but I do think it helps my kids and my grandkids especially. I think that the work week is going to get down to 4.5 days, maybe 4 days. And
already being proposed in a number of states.
Yeah, and I think it's going to be 7-hour days, and 8 hours with your breaks. I don't think it's going to be 9 hours with the breaks like it is now, right? You got to get 8 hours in plus breaks. Now it's going to be, 8 hours will be inclusive of the breaks. So I think you're going to see a work week get down to, say, 32 hours a week over the next generation. That is a big drop from the 36-ish that it is now. I mean, think about that. That's over a 10% reduction in the amount of time you have to work. And a third of the people can work from home at least a lot of the time. So, I think what we're going to see is, continued growth and productivity. I think the dollar stays strong. I do think that this range that you see right now on this chart for the last couple of years, I think there's kind of a band up here down to maybe where your number 4 is. And I guess
110 to 95 is the band.
yeah, and we could see a big correction down to 80-ish, but I don't really think that.
How does
I
that
think
help us?
it'd be
I mean,
unlikely. Well, you get big growth when the dollar falls, right? But I don't think that that's where the growth comes from. I don't think it's monetary manipulation. I think the dollar is going to be stronger, just like Bitcoin's going to be stronger because of just the massive secular shifts that are going on. So the United States is unleashing its huge competitive advantage to most of the rest of the planet. And that's what's going to make the dollar ultimately strong. It's not always a monetary event, right? It's not always policy. It just is the natural state of the economy that we're going to have a strong dollar. So I think right around 100, pick your band around it. I'm calling that the millennial dollar. I think the dollar is going to be up in this range for a very long time. There'll be moments when we have to loosen up and deflate the dollar so that we can inflate the economy. And I think that'll come in the next few years because, as I talked about on Macro Dashes, I think 2, 3, 4 years out, and it doesn't matter who the president is, we have a challenge. I think one guy handles the challenge better than the other guy, but we'll see. We'll see. All right, let's move on to how does that all impact the S&P 500? Here's your monthly chart of SPY.
That is absolutely a euphoric band, number one. Absolutely. Up to that 536, and realize that could extend.
Yep.
If you do my ABC equality, an extended and an elongated, concept, that 536 could push us all the way up to the 78.6 around 672.
And I actually think that's going to happen next year. I think that we're well into the 600s on SPY next year.
Yeah.
And then the tax code changes and a lot of things change. And
yeah, that's where the dollar chart sort of implies that, hey, that's why I see that crossroads.
Yeah.
And the outlier for me is XLU. I mean, we're about ready to get a breakout in XLU.
Yeah, well, I'll show that at the end here. So
okay.
Here's QQQ. Tell me
not
about
quite as euphoric, but pretty doggone close.
Yeah.
And looking for about a 475 number for our cycle wave 3 up there, and we should see a little bit of a back test. Now, I think how shallow that is, if it stays above the 386 on the retrace off of that, then this leg could continue as well. And, tech has been our leader. That's where all of our generals basically have been. I don't see that changing. And, that's one thing. The commercials are buying any dip. I mean, they're even still buying the dip and test on, but it's at specific points. I mean, we had 2 rallies last week just that were unbelievable.
Well, 9 of the 10 richest companies in the stock market are on QQQ.
Mm-hmm.
So, I mean, companies with money on their balance sheet. So I have my orders in at 400 for QQQ. What's that pink over there? That 8-day average was at 408.
Yep.
So I should maybe raise my orders to about 410, you think?
Yeah, either that or scatter plot it, break it up into 3 blocks.
So 430, 430, 410. And
what I always do as a good marker is I set, good to cancel orders for a couple shares in these different blocks. And when it gets hit, then I go back and look at it. Okay. It's just an easy way for me to get a position on, decide, look at the market conditions and then look at the symbol and decide whether I want to add.
All right. XLU you wanted to talk about. Tell me about it.
Yeah, we've had a demeanor change here. We've now flipped bullish on the count. So we're looking for a minimum of 50% back unless something, catalyst changes this, which would be about 72.16. Count puts the target 1 up around $83. So it's quite a move from where we are now.
So 4 years ago, this is the weekly chart. It only goes back a couple of years. 4 years ago, I was saying, hey, folks, the utilities have a huge CapEx cycle coming. They're going to get beat up for a while.
Yep.
So here's 20. So basically, they've moved straight sideways, a little up, a little down, but same place that they were 4 years ago. So you're thinking that they have a rally coming.
Yep, I think it's a 3 drive.
Yeah.
Technically, it meets all the criteria here. Right. Or if it becomes an XABC, you'll have a shallow, I can't point, but just below where the 83 is. Just a slightly higher high above our 3, the primary wave 3.
Okay.
So the 2 typical outcomes of the retrace there is either a 3 drive, which has the capability of retracing 100% of the move, or an XABC pattern, which also has the ability to go to 100%, but typically it's the 78.6.
So I just want to point out to people that, look, it's at 65 now. The upside is about 84. That's all right, and it pays a dividend. However, we have a couple of utility, and I think that the one in clean energy that we have, or the 2 in clean energy we have, are going to outperform the index. I think that the one that owns American Transmission Company is going to outperform the index. And if you're in it for, the marathon, if you're running the marathon, I think there's another company out there that isn't really considered a utility now, but they have a gigawatt of energy production. And by the way, a whole bunch of Bitcoin on their balance sheet. I think that they outperform, and I think that they end up being, think of this analogy, think about Netflix versus all the other media companies. I think that the company that I'm talking about is kind of like that against all the utilities. Plus, by the way, they have a digital business too. So, this is interesting. The one thing is that if this ends up rallying over the next year or two, that's usually really bad. It's usually an indicator of a pivot point down for the broader market.
Yep.
So that is the indicator here. It's not so much that we want to make money on these utilities on this index. It's that we're going to watch it. And if it goes up like this, that's usually bad for the rest of the stock market. Yep. It's a harbinger of bad things.
Yeah, it's a tell. I really didn't post this for the purpose of the trade.
Right.
It was the purpose of, hey, but like I said, I'm seeing cracks in the bull case. And this is one, a big factor. When the funds start moving to utilities, right? You mentioned the chance of recession, or worse. Like Goldman Sachs lowered their projection to 15%, whereas Bank of America is 20 to 30% chance of a recession. Yet last month, 95% of the CEOs were projecting a recession. And this month, it's dropped to 84%. And when they usually do that survey, it indicates that they're preparing for a recession. So, that the utility chart here supports a recession in the near term, 12 to 18 months.
And so the economists, the respected economists, are basically all going away from the recession forecast. And yet little Kirk Spano, who said that we'd have a soft landing 2 years ago, and everybody laughed at him, is now saying that about 2 years out, we should get a recession. And if there's a series of black swans and mismanagement, it could turn into a depression. And I get laughed at for that. So
the market's ringing about a currency crisis again.
Yeah.
I don't know where it's coming from, but it's, it's just there. I'm hearing the echo again.
Well, it's those stupid Austrian economies.
Yeah, I think it's the Fed fund window is a big factor. They wind that down. And
everybody underestimates how good the Fed has been.
I think they've done a great job. I mean, it's, where would we have been if they didn't act after COVID, to be candid?
We'd actually be carrying around gold bars, I guess.
We'd be standing in lines.
We'd have a bucket of corn and a gold bar.
Yeah, with 20-foot gaps, so they'd be 40-mile long lines.
All right, so let's visit the Russells.
Okay.
Tell me about this 1 month chart.
We're extended here, looking for about 213. We're our second leg up on if you're looking at the weekly chart. The monthly here, it could break out here. I mean, that's the crazy thing.
Yeah.
However,
Tom Lee says it's going to happen.
Yeah, I think the back test off of our B, if we stay above the 50-day, I would say the bullish case is more likely. But we won't know till that back test. So from here, we'd probably be about $15 lower, I think, on that back test before we know. So it's probably 6-8 months out before that timeline really manifests.
All right.
So we're sort of in this range, I think, second and third quarter.
So if I'm right about there being a great, like I said, we never buy IWM because it's too big of an index, too much crap. However, within that index, there's some great companies. And if you build yourself a basket of around a dozen companies that are micro caps getting onto Russell, and then companies already on the Russell that might get onto the S&P 500 someday, build yourself a basket of around a dozen stocks, 20 if you got the energy to do 20, but around a dozen is adequate diversification as long as you keep your positions relatively small, relatively similar in size, and then just add to the ones that are really executing and the market is recognizing it, obviously, right? A lot of companies that execute, we own a lot of companies that are executing and the market just doesn't care yet. So, that's when you pyramid up is when the market starts to care. But I think that what I would tell people is that over the next few months, if you can buy the dips on our small cap basket, you really probably want to do it. And again, don't overdo it. Mind your asset allocation. But I think that you've got a really good opportunity because the market still hasn't cared. It's been over 3 years since this index set a high. That's unusual.
Very unusual.
All right. So I needed some charts on emerging markets. I just want to run through the emerging markets here because they are a player in my 401k plan. Now, emerging markets have sucked for a long time, right? We got the one rally off of COVID. But if you take a look, it's basically round tripped over 6 years. It's in a rectangle where either we're going to get a big breakdown or it's going to break out. Here's what I think is going to happen. I think it's going to jitterbug here on the dollar strength, then it's going to break out. Now, the broad emerging markets index, again, too big of an index, too much shit. However, some of the ETFs that I use, this is the Freedom Emerging Markets ETF. It's been one of the leaders in the emerging market space. It doesn't include stocks from countries that don't really have good rule of law, like China or Russia. Nobody can invest in the West by law. However, this looks to me like it's going to jitterbug and break out. I think it gets way into the 40s. This is a main holding in my 401k plan. Then you have, if you want some China exposure, and I think probably it makes sense to have some China exposure, just in case they're not the evil empire, and just in case they're not as dumb as Putin, right? I think that China is smarter than Russia when it comes to leadership, and I think that Xi makes some smart, pragmatic decisions. I think he cuts somewhat of a deal with the United States and Taiwan. And I think that China probably has upside. I don't think there's a lot of downside left. We're at the bottom for direct foreign investment. That can only really go up. So this ETF is like 30% China, 70% the rest of Asia. It's their 50 large caps. I think that we're at another spot where it could, can it break down a little bit? Yes. However, I think the breakout is almost a 50% gain from here. And maybe a double. So these orange lines and this analysis with the yellow bar is called a fair value gap. And it's kind of where institutional money pushes at each increment. And I think that this first increment is going to happen. It might dip first, but then eventually it makes a run at 100. And then we'll see if the dollar is falling and emerging markets are doing well. I think what probably happens is it makes a run to here, pulls back during a 1 or 2 year economically challenging time a few years out, and then it rallies back up. We do know that the emerging markets are growing faster than anywhere else other than America. And then the other region that I like other than Asia is Latin America. And of course, I like India too. Some India stocks on the AIA. From time to time on a pullback, I'll invest exclusively in India and an India fund. But Latin America, now, this has a high correlation to Brazil, even though it's across the whole continent. Brazil is about half of the fund, though. So this is a way for me to get Brazil performance with greater diversification and a bigger margin of safety. It came off of here, and we've been in it a little while. I'm really hoping that it pulls back because I do think that it continues to rally. South America is really set up well. One, they sell stuff to us and to China. So, I mean, they're in a great space. I mean, I just think South America, they're resource rich. I think that they are where Asia was a generation or even 2 generations ago. So I think that South America has a lot of upside if they cannot go to war. If they avoid war and extreme right-wing stuff and extreme left-wing stuff, if they find some centrist tendencies, I think that they're in good shape. And these are just the mechanical Elliott waves that the computer puts in. So in the future, we'll have charts from Shooter, which I'm sure will be much better than this stuff. Any thoughts on emerging markets?
I like emerging markets here, except for I'm still going to think half of what I would normally do. I do like Latin America, and Korea, for example, is one that stands out. Just because of the contracts that, sort of come across my radar, manufacturers who are building plants there, et cetera.
I agree with that. I think for position traders, I think Korea looks pretty interesting. I don't have that in my 401k just because I ran out, but I like it.
Yeah, I'm not recalling who actually wrote the article, but somebody had written an article, but fairly in depth about China that I read. It was probably the week before last, and the problem in China hasn't changed. Even though they have that great manufacturing capability, ultimately the difficulty is that their market is not really as profitable for foreign firms because there's no consumption. I mean, there's some consumption coming out of China, but they don't spend like Americans do.
Right.
So they don't have that mindset where they're going to go out and buy that new refrigerator because their refrigerator door has some scratches in it. You know, when that refrigerator is dead, they'll buy a new. So, you know, I think that traffic is one of the quagmires in us seeing a lot of growth out of China. And, you know, you even mentioned we got that disinflation coming out of China. Sorry, I couldn't find a word.
Right.
But it's
on the
where
manufacturing side. Yeah.
Yeah. So it's been 30 years it's been coming out. I don't see that it wins because I think China has to accelerate it because of that declining production in-house. So I'm a little lighter on China. I think China has a number of years where we still struggle. That's my 2 cents.
Yeah, well, it's going to take a very long time for China to change the culture, right? They've been trying to get the consumer to spend more in China for 2 generations, and really in the last generation. It's going to take another generation for them to spend more. So I do think China is a choppy market. You have to look at it cyclically. I think that because we're at the bottom of the foreign direct investment, and that can only go up, and consumption can only go up, and prices are super low, I think that we have a rally coming here. Do I think it's another 30-year growth period? No. I think China has become a cyclical economy. So there are trades that you can make over 1, 2, 3-year periods. But, you know, I don't look at China the same way I do as India. You know, India I look at as it's going to grow for 20 years.
I'd rather do.
Yeah, China's going to chop, right? All right. Everybody wants to talk about Bitcoin.
Amazing, isn't it?
Do you want to talk about Bitcoin?
Yeah. No, not really, but that's all right.
Tell me about Bitcoin.
Hey, I'll just say one thing. I think I nailed the low.
I think we both did. Yeah. We were Q4 of 2022. We were pounding the table on that one.
That's for sure. Had some reservations, but I'm glad I held. That's for sure.
So now we're at the breakout point. Does it break out?
I think we get a little bit of an overshoot from our prior high, you know. So, you know, I think we're going to come in right around the 100 FIB, around 91 or 90K. It could be right at 90K because Bitcoin has always liked even numbers because you get a lot of the whales who sell pieces there. And then the depth of that back test will really tell us whether we get a blueprint of the prior high. You know, that this whole, I can't point with the mouse, but where my blue line is over to the left. It's very likely that pattern there duplicates itself. So we get a new high and then we get a really decent back test. And in one of the counts that I was looking at, you know, I see if we extend to 90K, our back test brings us in around 50K, 54K.
Wow, you think
that, you know, so that's going to be a little challenging to ride that. So I just want everybody to know that in your thought pattern and structuring your investment or trade or however you're getting a piece of Bitcoin, that you need to anticipate a decent drawdown. So, you know, where you can take on covered call risk, I wouldn't do a whole position, but I would do a piece at 90K when we get there.
Okay. So here's what IBIT, the iShares Bitcoin Trust, this is the one I'm using. I have orders in at 39, 36, and 33.
Yeah.
To buy.
That's fine. I think the 32 is a little deep on the retrace. That's a manual visual of the breadth from wave 1 to wave 2. So, right. You know, equality is, you know, typically back to at least 386. 50% fibs just a little below there, right about the 8-day.
Okay.
It isn't actually leveled on there because we were reducing the labels a little bit, trying to make it a little cleaner. So, you know, if you know, I bet the best way to do this is take our low and take our high and draw a fib tool, and where you have 3 levels, 50%, 61.8, 78.6. Those are all 3 possible outcomes for a retrace, you know, from where we are now. See, the question is really with Bitcoin, we should have had a deeper drawdown at this point, but we haven't.
Well,
and
look at the chart. I mean, it's stairs. I mean, this is a bigger stair, but
it's true. But still, we should have been about 50% back on that last leg up to 1, and we're not.
How close is this?
That's 382, I believe.
Which we've talked about being kind of a thing.
It's euphoric, but the fact that we haven't put in a new high on this leg already sort of adds a little weakness to the the bull case for me. Because you know when you get these bounces that come out, you know, so we ramp, then we retrace, and then we overshoot on that bottom, and that gives us the euphoria for us to bounce and really get a, you know, what everybody calls a short squeeze, okay? Yeah. Because now everybody is getting on the wrong side of the trade, and the dealers have to buy the instrument on the other side, because of their risk ratios. And that's ultimately what happens. So if you don't get that euphoric push where we overshoot, the catalyst isn't there. Right now, the catalyst isn't there for us to continue to go. It's WAN.
Yeah.
You know, you can see how we pushed on the chart, and it's just sort of, it's not really flagging, right? See the last 3 candles? It's not flagging.
Right.
It's sort of weak. You know, it doesn't want to continue. It needs back to. So I would say gap fill at least, which is, you know, down to what, maybe about 34, 35.
Yeah, so 38 for sure, and then down here.
Yeah, I think gap fill there, you know, it's, you know, you can go back about 8 candles where that big red candle is, that retrace.
Right.
You know, 8 candles to the left, or 10, the big red candle, more. Yes, yeah, that's what we want. We get one of those dips by the dip like that, right, because that means we're going to have a squeeze come off the bottom there, and that is our breath is just too shallow. You know, obviously Bitcoin shoots through the roof. But, you know, this is, we would think there would be great correlation, and there is when you look on the shorter time frames. But really, the ETFs are telling me something a little different. It's telling me that we're in a flat or we're going to retrace, but Bitcoin doesn't. So they've always told, sometimes they have the same collective view, but most of the time they tell a different story. You know, it's just like in Ethereum, you know, the ETHE ETF, you know, for the longest time, it's been bearish, you know. And just before the breakout, it turned bullish in Ethereum. So it was telling us that there was the flat, you know, it's either a bear pattern is either a flat or a correction. You know, not every bear market has to be a correction. It's just where the euphoria to the upside just stops or wins. Make sense?
Yep. My overriding thesis on Bitcoin remains it's worth about $1 trillion right now. I think it's going to between 5 and 10 trillion. So even if I'm down 10% or 20% for a month or two, I don't think it matters. So
I agree. I mean, I agree. I'm just saying, if you haven't, I know there's a lot of people who aren't in Bitcoin yet.
Yeah. Well, and that's why I think it's just going to keep going up. We've talked about this before. The financial advisors are just starting to put people into it. So this dip that I think we're about to get, I think you and I agree that there's a dip. I don't know how much dippy.
Gap fill's a good spot.
Yeah, this line right here just seems to make a lot of sense.
I don't think it gets back down. I think it puts in a higher low. That's, you know, but I do think we would be, from an entry standpoint, gap fill is a great spot.
Yeah. So 36. I hope my $36 orders hit is what I hope.
Yeah, it should be a little higher than that. Where it's 5 candles back basically is where your gap hurt.
Okay.
All right. So the low side of that gap, right, even if it's into the gap at 3/4 of the way into the gap, quite often the gaps don't get filled on an uptrend. They get filled up when we come back down on the other side. So that's just the range I would be in. Probably 36 to, you know, 37 is probably the range we should be in.
Okay. Well, that's where I have my orders set. So hopefully that's what happens.
Good job.
All right, folks. If you like the format this week, mentioned it in the chat or something on your investment website. Yeah. Well, I think it's easier for people to look at. So, you know, we'll get those charts even better. You know, just stretch out the time frames a little bit, and I'll see if I can get Shooter to put a couple annotations in, and away we go. But
I kept it real simple.
Yeah. No, it was what I asked for. Thank you. In the next quarter, in Q2, I think we get a pullback in stocks, a little pullback in Bitcoin. I think they're both very, very viable. Very, very viable. I think that the big problems are starting sometime in the second half of 2025 or into 2026. I just see a lot of clear skies for the next year or so. All right, everybody. Have a good one. Thank you very much, Shooter.
Awesome. Happy Easter, everyone.
Yeah, happy Easter. Enjoy some chocolate and deviled egg. I don't know why they go together, but
I'm going over to this Easter egg hunt with the grandkids, and they're supposed to have 20,000 eggs.
20,000 eggs? Where do they do this?
It's up at the Woodlands Church.
Oh,
they do a big giant event. They got this huge property, this expansive property, and they got all these trees that are on the front side that surround the church. So there's people out now planting eggs.
That's pretty cool. All right.
And they won't let anybody come in and do an egg hunt. So
all right. Have a good one, folks.
All right, you guys too. All right.